Dear students, in this module, that is module 3, I will give you some basic definitions and some important information about the Income Tax Act. So here, first point I want to explain is agricultural income. First thing you have to remember that any agricultural income derived from India, that is exempted. This is under section 10. Agricultural income is defined in section 2, subsection 1A of the Income Tax Act. So the first thing is it's exempted from income tax. Now what is agricultural income? Any rent or revenue derived from land which is situated in India and is used for agricultural purposes. You have to remember one thing, if agricultural income is derived from a neighboring country or any other country other than India, it will be taxable. Now the definition of assessee. See, I used to remember when I teach this income tax, the term assessee, when they hear itself, students will get scared. There is nothing to fear about that. The person who is paying tax, he is called the assessee. It is given under section 2, subsection 7. Assessee's definition, if you see, assessee means a person by whom any tax or any other sum of money is payable under the Income Tax Act. See, when I am paying my Income Tax Act, I am an assessee. When a company is paying income tax, that is an assessee. A shipping company is paying tax, it's an assessee. Whoever paying tax, it's an assessee under the Income Tax Act. Now there are three types of assessees. One is ordinary assessee, second is representative. Three types: ordinary, deemed or representative, and assessee in default. Three types. So ordinary assessee meaning just regular taxpayers who are regularly filing the tax returns. Second is representative assessee or deemed assessee. See, for example, if a person is an NRI living in another country, but they have got taxable income in India. At the time of paying tax, they may not be in India. So what they will do, they will represent somebody, their business managers or their close relatives, parents, anybody to pay the tax on behalf of them. Then they are called either representative or deemed assessee. Third one is default, assessee in default. That meaning you have not paid your tax on time and Income Tax Department has taken an action for collecting the tax. So that is assessee in default. It can be for not showing the correct income, not filing your returns, any irregularities found by the Income Tax Department and they are taking action on the assessee. So three types. One is ordinary assessee, that are the regular taxpayers. Second is deemed or representative assessee. They are representing the somebody else. Third is assessee in default, with whom the Income Tax Department has taken some action. Now, what is assessment year? Assessment year is given under section 2, subsection 9. Some sections which I am telling is important because these are, you can expect for 2 mark questions. When you are giving, you can quote the sections also. So, assessment year meaning the 12 months commencing on the first day of April every year. So, here this assessment year is 1st April 25 to March 31st 26. This is our current assessment year. So, this is for assessment year, current assessment year. Next year it will be 1st April 26 to March 31st 27. So, it is the 12-month period. So, that is the financial year, always April 1st to March 31st. Assessment year is the financial year of the Government of India. We know that everybody will prepare the companies and all, we can see that they are preparing the books of accounts for 1st April to March 31st. Now, assessment year, the process of assessing income is called assessment year. Assessment. Assessing the income of an individual, assessing the income of a company, that process is called assessment. Now, present assessment year, 1st April 25 to March 31st 26. Now, what is previous year? Previous year is given in section 2, subsection 34 and it's also mentioned in section 3. So, 2 sections are important here. Previous year meaning it's coming before. Always you have to remember it's a 12-month period. So, if this is the assessment year, previous year will be 12 months preceding to that. That meaning 1st April 24 to March 31st 25. This will be the previous year. So here, year in which income is earned. If you are earning income this year, next assessment year, you have to pay the tax. So previous year means the previous year as defined in section 3. That is how the definition you can say. And previous year means the financial year immediately preceding the assessment year. Preceding meaning before. Now, for a new source of income, the previous year starts from the date the income is earned or the business or profession is set up and it ends on March 31st. That means in between the year. They may not be starting every business or income on 1st of April. Anytime they can start. But you have to remember from that date till March 31st will be the assessment year. This, they made it compulsory, uniform previous year from 1989-90 financial year, they made it compulsory. But there are certain exceptions to this rule. First year, previous year in case of a continuing business. Continuing business meaning it is the financial year preceding the assessment year. Companies they are running for a long time. Or any continuing business. 1 year they completed, second year they are continuing. That means their previous year and assessment year there will not be any change. Whereas newly set up business or profession or a newly created source of income. The previous year is the day the business is set up and end up on 31st March of the following year. Always you have to remember uniform financial year is created. So here you have to remember assessment year will always end with March 31st. But this date can be different if they have started a new business in between. So the first year can be 12 months or less than 12 months. Imagine a person started business on 1st December. That meaning his financial year will be only 4 months. December, January, February, March. So first year it can be 12 months or less than 12 months. First example I give. A business started on September 15th, 24. The first previous year will be from 15/9/24 to 31/3/25. Because he started business on September 15th. That is only 6.5 months. For all subsequent years, it will be from April 1st to March 31st. So only in the first year, exception is allowed. Now, businesses maintaining books of accounts as per calendar year. Some businesses, they may be maintaining books from December to December, New Year to New Year, Diwali to Diwali. It's left to them. But for filing tax returns, they have to make the accounts as per the financial year and they have to file the returns. Then the income of 9 months of one calendar year and 3 months from the next calendar year is selected. Imagine a person keeping calendar year. Calendar year meaning January to December plus January to March from the next year. Like that 12 months they will get. That is April 1st to December 31st from the one calendar year and January 1st to March 31st from the next calendar year. Now one problem I will explain. Mr. A joined a company on 1st July 24 and received a monthly salary of rupees 20,000. He is resigned from the job on 30th November 2024. Subsequently, he started his own business on 15th December 2024 and the business income earned up to 31st March 2025 amounted to rupees 60,000. Based on the above information, compute the taxable income of Mr. A for the previous year 24-25 assuming he has no other source of income. So in the case of A, two incomes are there. First is salary income. July, August, September, October, November. 5 months salary income. So 20,000 into 5 he will get 1 lakh. Plus his business income. Business income for that year it is given as 60,000. So his total taxable income will be 1,60,000. So this is how you calculate that. So 1,60,000. July to November 5 months. Then remaining he started business and he got 60,000 profit. So 1,60,000 is his profit. Now I am giving you a problem. I will give the answers in the description box. You can see from the PPT. You will be able to find out. So a business started on 1/1/25, maintaining the calendar year for maintaining books of accounts. What is the previous year? Second question, an employee joined his job on 10 September 2024. Third, a new business set up on 1st May 2024. Fourth, a new business maintaining accounts from Diwali to Diwali and started business on Diwali 2024. A person who won the lottery ticket in 2024-25. So 5 questions. I am giving the questions. I am giving the answers also. You can see in the description box in the PPT. But it's a genuine request to attempt these questions because income tax is subject you can learn only by doing. So that is why I am not explaining everything. So some questions I am giving you for your reference and for you to do that. So answers are given. You can check in the description box. Now, one quick point I want to explain. Exceptions to the rule of income of the previous year is always taxed in the assessment year. I told you if I am earning income this year, next assessment year it will be taxed. But there are certain exceptions. In the case of some businesses, some income, the year in which it is earned itself, it is charged. Exceptions are shipping business income of NRI ship owners. NRI ship owners meaning it is not necessary that at the time of collecting the tax or filing the tax returns, they will be available in our country. So the moment they will touch our port, whatever tax is due from them, they will collect that. So that income, whenever it is earned, it is collected. It is not shifted to the next year. Second is, in the case of a person living in India, people migrating to other countries. So you have to remember when they are migrating to other countries, they will not come back. So before migrating, whatever tax is due from them, we will collect from them. Then assessment year, assessment of any association of persons formed for a limited period. Say for example, for a flyover construction or a building construction or a metro station. They form for a limited period. So they will not be continuing. They are discontinuing the business. That meaning that the time of discontinuing, whatever tax is due to the income tax authorities, they have to pay the tax and they have to close the business. Then persons likely to transfer assets to avoid tax. We know that we have heard so many cases. People living, rich people, companies, they have defaulted the banks and they are living in other countries. So they, to escape their tax payments, they will transfer their assets to their immediate family members or whoever they will trust. Whenever the income tax department will come to know about that, they will not wait for the next year to collect the tax. The moment they will come to know that, they will collect the tax immediately on the spot. So these are the exceptions in the case where income is collected or a tax is collected in the year of earning itself. I'll repeat. In the case of shipping business income of NRI ship owners. Second is person living in India. Third is assessment of any association of persons formed for a limited period. And fourth is persons likely to transfer assets to avoid tax. So this is what I wanted to explain in the module 3. Hope you understood the points and do the problem and check for the correct answers in the description box. Happy learning. Thank you.